just making another cup of coffee. Not a pot, just a cup. All right. Let's go. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, hey, welcome to Wayne's office. My name is Wayne. Oh, my God, what a coincidence. Cool. So the sun is rising over there. Isn't that nice? Great. We got our cup of coffee with cups with little animals on them. Isn't that cute? And we got a market coming down. Oh, no! Well, we know somewhere between June and July, there's a top in the stock market, right? We know that. Do we? Is that right? Have you looked it up in the seasonality tool? Or are you just kind of making it up as you go? Tomorrow we got non-farm payrolls. So don't forget about that. Maybe the world is waiting for non-farm payrolls. That's a big number, right? We'll see. Maybe the world's waiting for peace in the Middle East. Maybe. Or maybe it's been a nice run in the stock market and it's time to start hedging for the summer, but also hedging for the elections. Hey, the elections come into play? What elections? The ones in November, bro. Holy smokes. So I'm going to add some geopolitical, I guess you would call it, stuff into our prediction radar. And one of the things I'm trying to get is U.S. election prediction stuff to show you the race for the House and the Senate. And it's interesting because I have preliminary data, and it's basically 50-50. Hey, welcome to America! Yeah, so anyways, we got a interesting day today. We can review what has happened so far this week. We've had a lot of important data. We have weekly claims, which goes into our NFP model for tomorrow. We can look at stocks, Forex, commodities. We track commodity future prices, as you know, but we also now track activity in the options market. Institutional grade bonds, junk bonds, track a lot of stuff now. And let me tell you, we went about 3 or 4 weeks of just kind of slowly melting up and sideways. Meaning if it wasn't for the AI stuff, we'd probably be sideways to slightly down. And then suddenly, but like for weeks of that, right? And then yesterday, or last night even, things changed dramatically. We can see it. We track all this stuff at Tradars, and all of a sudden something dramatic happened yesterday. That's cool. It's good to know these things because we need to adjust to reality based on facts, not fears and not conjecture, not assumptions, or just simply not walking blind, right? Guess we could do our headline. By the way, are you using our Squawk Box? You know, people pay a lot of money for a Squawk Box like this. This is free. Traders.com. It's free.
WTI price forecast. Trades flat slightly above $93 barrels amid US-Iran deadlock. Oil. Inventory draws heighten upside risk. ING. Australian dollar edges higher as trade swings back to surplus amid geopolitical caution. Citi sees oil prices grinding higher as US-Iran talks falter.
Euro rises against majors.
Euro bounces up against the US dollar despite weak Eurozone retail sales data. Hyperliquid and Near protocol fall sharply as Arthur Hayes dumps Hype and Near for WorldCoin. Irish economic downturn deepens in Q1.
CEE, FX, divergent policy path across central banks. Societe Generale.
Cool, right? So the idea here is you can log into our platform. Again, this part is free, right? And you just pop this up. You eyeball news coming up. You eyeball some charts. You see what's winning, what's losing. And then you just minimize this behind your trading platform. And while you're going through your charts and doing your business, you can actually listen to the news. Hey, trader, have you heard the news? It's kind of neat, right? Yeah. Yeah. And there's no better deal on the planet because this cost me a lot of money just to run it. And
Indian rupee stays calm as investors await RBI's policy decision.
But it's free for you. It's not free for me. But anyways, let's go to our sit rep.
Good morning, I'm Aiden. Let's get you up to speed on this shifting landscape. Today's sentiment is decisively risk-off, marked by a significant pullback in equities and a flight to safety. While the broader monthly trend remains risk-on, the immediate session is dominated by caution as the daily risk pulse has turned sharply negative. This shift is punctuated by a rise in the U.S. 10-year yield to 4.491%, adding pressure to major indices while driving a surge in gold prices. 1. Gold is gaining ground following the Israel-Lebanon ceasefire deal, with traders now eyeing tomorrow's U.S. jobs report for direction. In the UK, the construction sector saw its biggest contraction since 2020, which is dragging down the FTSE 100. Meanwhile, the Australian dollar is finding some support as the country's trade balance swung back into a surplus, providing a rare bright spot in a cautious market. In the crypto space, we're seeing sharp sell-offs in assets like Hyperliquid and Near Protocol following high-profile portfolio rebalancing. Biggest movers right now, Bitcoin, Ethereum, Hang Seng, and high-yield bonds are down. VIX is up.
Wow. It's been weeks since we've had risk off. And then this morning, something's changed. Remember, we measure this with hundreds of calculations. It's not that VIX is up 3% and that changes everything. Well, that's very important. But also, the stock market is down 1%. Remember, yesterday we were at 76, now we're at 7,500. Okay, that goes into it. Bitcoin's down 4%. That goes into it. Yeah. And a few other things go into it as well. And holy schnickersnocker. Nosedive yesterday. So all those things are bad, but we're watching changes in the put-call ratio. Bad. Changes in Bitcoin. Bad. 210 spread. Bad. Junk bonds. Bad. Right? Okay, gold coming down. Bad. Whoa. Cray, huh? Are you guys happy that we're tracking things like yield spreads and option ratios as measures of what the institutional investors are doing so that we can align? Are you guys happy that today feels a lot like yesterday, but you log in and you know quantitatively it's nothing like yesterday? That something important is happening. You're like, yeah, but the stock market's down like 1%. That's a bad day. Well, you know what? Everything just changed. Good. Now you can analyze this and make informed decisions. Do you adjust your aggression? Do you stop buying dips? Or are you a bear now? And then if I was me, I would take this data and say, well, historically, aka seasonality, does a change in market sentiment this time of year tend to last? Is this going to be down all the way to November? Or is it going to be down all the way to September? Or is it not going to be down? Is it temporary or is it going to roll? You could say historically, now that we're in a risk-off regime, now longer term, we're barely, but we were a risk-on. We went from a 4 to a 0 in one day. That's huge because we've been at 4 for 6 weeks. So then, you could say part of that is the stock market had a bearish day. Then you could say, well, I should research, is there typically a top in the stock market around this time of year that would indicate the pullback could last more than a day? What if it was weeks? What if it was months? What's normal? What should I be aware of? How should I adjust? Because I think we've all been in situations where, let's say we're riding a bullish trend and everything's going great. And you buy a dip and it makes a higher high, and you buy a dip and it makes a higher high, and you buy a dip and then it makes another high. And then it sort of like tops out, comes down, but you're still bullish, so you buy that dip, and then it makes a lower low and you buy that dip, and it makes a lower low and you buy that dip. And all of a sudden, all the money you made on the way up, you gave back on the way down because you didn't know the reversal was coming, or the probability of the reversal coming is going up. Your risk is going up. And so you can say, okay, well, it's still early June, but should I be worried about the stock market? Now, as a fund manager, I could do things like stop accumulating. The other thing I can do is hedge. The other thing I can do is take some profit and sit on the cash until I get to a better, seasonally adjusted accumulation strategy. A buy later. Okay. Neat, right? So we have all of this data at your fingertips. You should never be trading blind. And yeah, most of the time, today will be a lot like yesterday. But there are periods in time in which that is not true. So if it's summer for you and it was warm yesterday, it's probably going to be warm today. But we know at some point in over time that will no longer be true. After the solstice, you're like, well, every day will be similar to yesterday, but less likely to be as hot as it was. Every day is now more likely to be a cooling period. And sometime you'll go from, your sexy bikini at the pool to suddenly you're shoveling snow. So we got to figure out how to understand that to know when things are changing. It's hard to see in the short term, but if you knew our rotation around the sun and the tilt of our planet, because it's tilted, I think right? It wobbles. That's why we have seasons. If you understand the wobble of our planet and the cycle that we go spinning around our star, then you're better able, because you know these things, to anticipate changes in weather. For example, in Georgia, it rains a lot, but it always rains when the dew point crosses the right temperature. So it'll rain in the morning, and then it'll rain in the afternoon. Now, you can use a clock to measure that and say, well, it seems to rain around 4. Okay, that's one way to measure it, but you could also measure the dew point. At what point does the water in the atmosphere condense into liquid? And yes, temperature is involved, but how much moisture is in the air to even condense? So if you have all that information, you're able to predict clouds and rain. Now, if you also have a satellite in space, and you can also see 1,000 miles away, weather going your way, right? If you have historic data, you could say, hey, did you know hurricanes tend to happen in the same months? And you can be prepared for that. And now you have all that data. And yet every day is unique, but every day is the same. It's like Siddhartha, who became enlightened, Buddha. Siddhartha is sitting by the river, and he notices every day the river is the same. He sits by the river, and it's the same. But then he sticks his hand into it, and he picks up a unique bit of water. And then he puts his hand in, and he pulls up another unique. So it's always the same and it's always different. And that's what we deal with as traders and investors. It's just that easy. But you can't say, what river? Wait, there's a river? Yeah. Yeah. It's right there. Right there in front of you. You're like, Wayne, I think you took that analogy too far. Yeah, all right. Well, whatever. Crypto, not feeling it, huh? Kiwi and Aussie down. That's decisively risk off, as Aiden would say. Euro Swissy. There. Okay. Now Euro up. All right. Interesting. Swissy strong. That's risk off. Dollar a little bit strong. That's risk off. But I don't see panic in the dollar. But to be honest, I think the dollar sometimes it's still a reserve currency, but it doesn't act as a safe haven nearly as much as it did 20 years ago. So that's kind of interesting. So it's a reserve, but it's not a safe haven. Apparently, Japan still is, and Switzerland still is. But in a risk-off environment, which we are in, my general assumption, what's in my brain, which is my life experience, filtered through bias, which is normal, dollar, yen, and Swissy should be strong in a situation like this. And right now, that is true. But you can go to the Pearson correlation coefficient calculations that we do, and you may find, well, it may be true, but it's not as true. That's cool. Times, they are changing. Okay, oil coming down is actually fairly good, but it's still high. See, so let's step back a little bit and look at it from a swing point of view. Oh yeah, today we have our swing trading group at 4 p.m. Yep. Be there, be square. It'll be a short one because the markets have been a little stalled. Maybe they're not. Maybe we're unstalling. We also have NFP, which means we typically have low liquidity. And then also, very often, what we do next week hinges on NFP. So planning the day before NFP sometimes is, whatever. I'm also dressed casually because right after that meeting, I will be working at a food bank. So I am dressed for that. So I'll put a few hours into the local food bank, which I like to do from time to time. Probably my 5th time, guessing. Yeah. So anyways, cool stuff. So anyways, we step back to the swing trade point of view, and crypto is taking a nosedive. Look at that, 17%. Wah, wah, wah. Energy is still up 4% from a week ago. So it's down today, but it's up this week. That's why you want to look at multiple time frames. And if you really want to step back, this is like looking at a daily chart. But when I look at Kiwi, I'm looking at Kiwi versus all the Forex pairs. So over the last month. So Kiwi has had a bad week, but a strong month. Stronger than any other currency. It's kind of weird, right? It's had several bad days in a row, but it's still the strongest. So maybe it comes back like the Knicks. Huh? You're down by 14, and then 8 minutes later, you win by 11. So it's had It's been down for days, but up for a while. Well, we'll see. That would have to be risk on, and that's the concern. Is this a new regime where it's risk off? Risk off, like I said, I would assume. Okay. A risk off, yen strong, dollar strong, Swissy strong. Those are my general assumptions. I can check those assumptions, but that would be my general assumption. And you would want to then measure this way, which these things are occurring, and it'll slowly impact the swing and it'll slowly impact the position. So if I can get my drawing tool, which I don't think I have up and running. Let's see if it'll pop up. Most of the time, we focus long term for strategy and short term for tactics, right? But if you anticipate we are near a top, then the short term helps you analyze the change in the longer term. So, like, let's say this has been happening in a while. So, long term, long, and then there's dips, and it's up for a week, it's down for 2 days, it's up for a week, it's down for 2 days, and then what? Okay. And so this period might be 6 weeks of trading, let's say. But what if you knew somewhere in this period of time, so I often call that a window. So we'll say, let's just call this July 1st. We know somewhere between June and August. Okay, that's a big window, but we can be more precise, but let's just use that. We know somewhere in this period, either before it or after it. So it's not the day, it's the period around the day, that most of the time, most years in this window, the market tends to reverse. So even when you're in the good times, which I will now do in blue, no, I'll do in green. Okay, you're confident here, you're confident here, you're confident here, and then you're like, oh, I should be a little more cautious about potential tops. And right in here, you're still confident as can be. And then you're like, oh my God, a double top? This time of year? Now you grow concerned. And then the lower low, definitely, you're already on the clue train, right? So in the first period, which I'll do in dashed blues, you're confident and you're not expecting a reversal. So you're focused on the long run, you're buying dips, and then on the short run, you're measuring the dip. Okay? To buy another, to buy another, to buy another. And then you're like, well, I wonder, I'm going to buy a higher low. Yeah. And then the double top. Now it's that anticipation. So now what happens? Now you go from the shorter term anticipating the longer term, not the longer term anticipating the shorter term. And that's impossible to do unless you have unless you have a level of anticipation. Not fear, but you have data to say the probability of that occurring in that window of time is higher than before that and after that. You just know the probabilities have changed. Now, how do you know the probabilities? Well, I track 20 years of data, and it's weekly data. So I have 100 weeks of data. Yeah. And what's cool, 100 weeks of data for every asset on the that we trade. So if you knew that, now let me roll over to it. yet another color. We'll do a purple thing. If you knew, let's say, let's do a sub window, okay, that the majority of the time, let's say 60% of the time in these weeks, so remember, let's say that's 4 weeks, we've tracked 20 of this week, of that one particular week, okay, 20 of these candles, 20 of these candles, 20 of these candles, 20 of these candles, and 20 of these candles. So we've looked at these candles, 1, 2, 3, 4, 5, 6. Okay, we have 20 years of those specific weekly candles. And what if you saw like 50% of the time it's down, 60% of the time it's down, 70% of the time it's down, 80% of the time, 90%, and 100%. Then you can say, wow, dude, we're getting right into the bear trap here. You know? And you should treat it like your money should be like a landmine. Where someone says, hey, dude, if you keep going in that direction, there's an 80% chance you're going to step on a landmine and blow yourself up. How would you behave? You're like, I'm going to risk it all. Why? There better be a damn good reason. But if you thought there was an 80% chance you're going to get blown up, you should probably adjust your strategy, huh? Hey, maybe go around. Maybe you should be in the tree line instead of out in the field. Okay, use a different technique. Hey, take a balloon. Take a hot air balloon over. Hey, you laugh. I laugh. I'm assuming you're laughing too. But you know what? They did it in World War I. Balloons and Zeppelins were a big part of that war. Yeah. Then someone said, let's use that new dang-fangled aeroplane. And so the very first, they would fly over and just throw hand grenades. But anyways, going back to this, it's a probability that you should be aware of. Yeah, for sure, Jim. Yeah. Can you imagine 5 guys in a balloon? Like, we're slowly chasing down the bad guys. Yeah. Although, 5 snipers in a hot air balloon, I'm sure they would have tried it. But you see, if you are confident here, and then you anticipate a change in direction because of data, you know the percentage of success is changing and the percentage of failure is changing. And you know this, so you anticipate the sniper. You anticipate the landmine. You can anticipate the ambush before it happens. So you adjust. Cool. And that's the period where we're in as of today. This is why I bring this up. Okay. The markets have been generally sideways for the last 6 weeks. A slow melt up in the stock market, but that's from AI. Everything else has been relatively flat. And if you do your analysis, we may or may not, I don't know, do your analysis, be in that period where the probabilities are changing. Now, if you did analyze it and you said, yes, Wayne, it may be early, but we are approaching that window, then today's sudden drop from 0 to -4, it stands out. It's got weight. I want you to get past just guessing. I want you to get past just trading the things you like to trade. I like to trade euro dollar. Dude, seriously? That's how That's your methodology? I like it. I like it a lot. Really? Why don't you trade what's working? Okay? But now, because, and I've talked about this before, you're trying to use confirmation bias um, to your success. Most traders use confirmation bias, and it's their weakness. We're trying to turn a weakness into strength. So, like confirmation bias, you're like, I like trading euro dollar. I don't know why. I have nothing against euro dollar, but why would you want to trade euro kiwi in this situation? Euro's the strongest, kiwi's the weakest. Like, dude, euro dollar's mediocre. It's not even a good trade. Looking at the facts here, I mean, you can trade it, but I don't think you're going to make any money. But euro kiwi and euro Aussie have a way better chance. Okay, so that's factual. So your confirmation bias, if you like trading euro dollar and that's all you stare at all day, you're going to find things to do because there will be oscillator crossovers, there will be daily pivots, there will be Fibonacci's. It will go up and down and sideways. But according to this, not by much. You're betting on the wrong horse, my friend. At best, it's middle of the pack. Okay? But you'll find something to do. That's confirmation bias. You're like, that looks good to me. But you shouldn't even be looking at it. Okay? But there are times when confirmation bias works, and we all have confirmation bias. This is what humans do. We are full of biases, good, bad, ugly. We have them. So we need to use this weakness. I mean, it's a human strength because very often, we have found in history, if you're worried about a tiger being in the tall grass or the stranger that walked into your village, okay, you need to act quickly, right? Snap judgment. You're like, oh, well, this guy carrying a club and a battle axe, let's sit down and talk with him. Maybe he's just come to our village because he's lonely. Maybe. It could be. But those that made poor decisions didn't, share their DNA with, right? So we inherently make these snap judgments, which is a bias. Like I said, good, bad, and the ugly. I'm not trying to say any of that's right. It just is. So you can have confirmation bias that makes you if you study German esoteric philosophers like Nietzsche, for example, he would say, what was his one? How did he phrase it? I'm forgetting my Nietzsche. Oh, I still don't remember. Does anyone know the quote? It's just right on the edge of my thought. I know is that which does not kill us makes us stronger. There's that one, but the other one. Anyways, you see what you want to see. It's built in. That's what a bias is. You see what you want to see. It's a filter that our brain has because we see so much, and most of what we see, we actually don't even physically see. Our brain adds it. So our brain is constantly adding stuff based on our bias. So if you want to buy euro dollar, you're going to find lots of reasons to buy euro dollar. That's what a confirmation bias is. You've decided before you even looked at it. Now, if instead of starting with charts, if you started with research, and like I said, seasonality is a great one, then you have this level of anticipation. What is that? Anticipation, you're thinking forward. It's a bias. So based on the data, you have a bias that the thing that has been working is very significantly less likely to continue to work. So you're going to be very sensitive to these changes because you can anticipate them changing before they've changed. There's the bias. And as soon as you see any signal that you may be correct on your bias, you instantly confirm it. You've seen it before it's happened. That's what I talk about in my book, Your Mind's Eye. You've already seen the reversal. You're ready for the reversal. You're ready for the lower low that's too low. For example, a 50% retracement, I love. A 786 retracement, I hate. And if you're ready for the 786 before it's happened, holy schnicker, you see it, and you're like, that's it. So that then predicts a double top. And then, of course, now you have a confirmation. You're like, this son of a gun is either going to make a lower high or double top. And if it does, I'm going to get out of my long position and I'm going to start, either walk away for now or start selling. And now you're using confirmation bias as a skill, as an asset, not as a risk. You're ready, willing, and able before it happens. And this is all based on data, on fact, on probabilities. And if you're using data that increases probabilities, what does that mean? You're probably correct. Okay? So if there's an 80% chance of a decline, it would be stupid to go long. Now, you might be right, it goes up, but it would be a dumb trade. You're like, a dumb trade? Wayne, I made 100 pips. I made a G today, but you made it in a sleazy way, selling crack to the kids. Hell, that's the way it is. Yeah, okay, you made a G today, but you made it in a sleazy way. You bought when you almost certainly were going to have an asset that no longer goes up. It was dumb. You're not brave, you're stupid. You didn't even perceive the risk, and you did it. That's just dumb. That's not brave. Huh? If you're not scared, you're not brave. Now, I'm talking to the trader in you, but you want some fear? Trade other people's money. Huh? Can you take care of grandma? Are you going to gamble grandma's money? Sorry, grandma. I had a bad month. Everything reversed on me. So you're going to have to move out of the nursing home. But I got you a beautiful refrigerator box you can sleep in. We'll put it behind the Starbucks so you can grab muffins out of the garbage cans. Yeah. What about charities? Have you sat down with someone and discussed their money over the next 300 years? Right? Would you take a big investment from your father-in-law? What happens if you lose your father-in-law's money? 3 or 4 times a year during the holidays, he's going to sit down and over Thanksgiving dinner or Christmas dinner, he's going to be looking at you like, you son of a bitch. You mother... For years. You better be right. Yeah. So I want you to be professionally focused. This is where I'm trying to get you. So when you wake up like a day today, let's go back in case you just shown up. We logged in today and we saw this. For 6 weeks, I didn't give a damn because, well, we were long-term moderately bullish. Short-term, we were treading water day after 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 day of treading water. And we are, look at all the calculations that we're doing here. Crazy levels of calculation. Crazy. We have an amazing observation of the entire institutional, global institutional investing market. And if you're tracking junk bonds as on 3 time frames and weight it for importance, and you do a whole bunch of other calculations, you go, you know what? We've been trading water every day for 6 weeks. Hardly anything has changed. And then you wake up this morning and you stop and you're like, holy schnickersnot. This means something to you. Now, why would it mean something to you? Well, what if you had that bias? You're like, oh my God, I think we're entering the window. You're entering the window. And you're like, I wonder if that's it. See, that's the confirmation. That's the confirmation bias. You're like, I wonder if we're entering the window. A -4 after essentially 0. I mean, we had been breached 1 over long periods of time. Maybe we're +1, -1, +1, -1, +1, -1, +1, -1 for weeks and weeks and weeks and weeks. Meanwhile, we're still bullish. Buy the dip, bro. Buy the dip. Keep buying the dip. Buy the dip. Oh, market is +1 today. Buy the dip. Oh, the market's -1. But long term, we're a 3, a 4, a 3, a 4. Cool. Buy a dip. Buy a dip. Buy a dip. Then you enter this window of time where you're like, hey, we're kind of getting in there. We're only 3 weeks away from Canada today. I wonder when we're going to top out. And then one day, because you have the bias already, your anticipation is your strength. It's not a guess anymore. It's not a worry. Oh my God, I'm worried that we're at all-time highs. And oh my God, I'm worried it's going to crash. Well, that's not helpful. I don't know how you get out of bed and do what needs to get done if you're terrified. I'd rather be informed and be able to measure my risk. In this case, you're like, oh, everything's good. We're a +4 on the long run. We're treading water on the short run. So I'm buying dips on the things that are moving, treading water on the things that don't. We get into our window of time based on your analysis of seasonality. And you're like, yeah, well, it probably comes soon. I don't know, maybe 3 weeks from now, maybe 5 weeks from now. And then suddenly you wake up and there's a -4. Now the -4 has context. You were anticipating it happening. You thought it might happen a couple of weeks from now, maybe around a Fed meeting. We have data to measure all of that. The Beige Book came out, what was it, yesterday or the day before? So maybe you've read that, maybe that's changed things. But you feel like it's coming. There is something coming. There is something out there. If you're terrified there might be a tiger in the grass, you'll never leave the village, and you'll starve to death. But let's pretend tigers migrate. And you're like, but it's June. There's no tigers. Well, in this case, tigers love to come to the village June. Between June 1st and July 31st. But between June and August, tigers tend to show up and eat people in your village. Okay, well then it's smart to be terrified. But December, that you've never seen a tiger ever in your village, but you won't leave the village because you're terrified. Okay, that's not cool either, right? Too many analogies. I know, you're like, this guy and his analogies. All right, well, I'm trying to speak to a lot of different people, right? And we all learn different ways. So anyways, if we're in the window and you're like, well, it's tiger season, and you hear some rustling in the tall grass, dude, yeah, you should probably take it seriously. You should be able to have this in context based on your bias, but your bias is informed with data and history, not fear, not assumptions, not worries, not even opinions. You're like, all this AI stuff's crap. This whole thing's going to collapse. Yeah, but you might be right, but I would like to have some data. Fundamental data, seasonal data, which is, and price action data. Because remember, I was a young hustler in the .com boom, and every day they would have experts on CNBC and Bloomberg every day saying, none of this makes sense. These companies are overvalued. They're trading at 40 times earnings. This is dumb. You should short. It's all going to collapse. Okay, it did collapse, didn't it? Year 2000. But if you shorted in 1994, if you shorted in 1995, if you shorted in 1996, if you shorted in 1997, if you shorted in 1998, if you shorted in 1999, and then you shorted in the year 2000, you're like, see, told you I was right. Yeah, but you lost 8 times in a row. So there's no honor in that. Can't miss the entire internet revolution. So you might be right. AI maybe is stupid. Maybe these warehouses are dumb. But I would want to be more informed than that if I, as a trader and as an investor. But I did live through that. And I'm pretty sure every company in the world and, well, essentially every human in the world uses the internet now. Yeah, well, I built the internet, not Al Gore. Yeah. Yeah, I was a very, 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 very early adopter. Yeah. Can you imagine this? Actually, I remember thinking, I need to learn HTML. Now, HTML back then, because I'm like, you can build a web page. People are like, what's a web page? Oh, you're on the World Wide Web. And most things back then were message boards, right? But then you got to a point where you could put pictures on the World Wide Web. And so you needed HTML so you can reference where on the server you uploaded the picture. So you would have text and you'd say, H1, welcome to my homepage, right? And then you'd have a little tag and it would put the image from your server. And that's it. Like it looked like a Word doc with an image in it. It was pretty funny. So very, 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 very beginning. And now look at it. It's everywhere. Yeah, AI is almost certainly going to be like that, in my humble opinion. Yeah, AI is pretty extraordinary. So be careful how you trade and invest. Huh? Make sure you got the data. If you're going to go against the grain, make sure you have provable rationale. You got our claims. So funny. What's he doing here? Let me yell at him because he's messed up the St. Louis Fed's database. Okay, we'll have him fix that. He's just pulled from the wrong something. We'll get this before it comes out. So I think he probably got this from the BLS, huh? And so he's pulled the wrong data points out of the BLS. It looks like the unemployment rate, actually, doesn't it? Yeah. Yeah, that's what it is. He's got the unemployment rate, not initial jobless claims. So he's working on it right now. We're logging into the Bureau of Labor Statistics right now. So I'll probably be announcing next week a new program in which Traders Way will pay for your Tradar's subscription so that you can get the whole gosh darn thing for free if you're an active trader. But you'll also get a cash rebate from your spread and you will get an equity bonus. So by Monday, I should have all that set up for you. So it'll be a quick and easy process. Yeah. Yeah. So for example, I used to do a process in which um, you would pay for it up front, and then based on your trading activity, um, you know, Trader's Way would compensate for your subscription, and then I would take that money and then I'd send it to you. So let's say you put in $100, you traded enough, and then I sent you your $100 back versus PayPal. It's too much work, too clunky. Um, so I'm working on an semi-automated process so that you don't pay anything up front. It just unlocks. Okay. Cool. Yeah. So just imagine like this. Let's say you make 2 or 3 trades a day. That's enough. That would unlock almost everything. Maybe everything. That seems pretty reasonable, right? Yeah. It's been a long black day. Hang on, let me see what Aiden's up to. Did he fix it? Let me check. I have to check back here first. Because if he has, then I have to update the site. Hang on, let me get something here. Aiden's struggling. I want to get this done we before the 12 minutes runs out. Hang on, almost done. Almost done. Just trying to grab something from the DLS. There's the MT4 charts are still at investorbootcamp.com. Yeah. But I used to have them on metatraders.com, and then the MT4 people sued me. So I'm like, all right, bros. You don't want me to build tools for your platform and support your customer base. Okay. Dummies. So then I moved them inside of Investor Bootcamp. All right, he's working on this right now. This is what I'm waiting for. 9 minutes. So when you look at this, we like euro, we hate Kiwi. So we want to sell Kiwi today. Euro is the first one. Pound looks flat-ish to maybe up later. And Aussie doesn't look good at all. So you have Euro Kiwi, that's it. Pound Kiwi maybe next. And Aussie Kiwi's a pass. It's only a 0.26. It's a pass. That's how easy it is. Look how fast. That's how fast it is. Okay, the whole process. And then you're like, well, I might be interested in buying Euro. Well, once again, Euro Kiwi's the best. Then Euro Aussie. And then Euro CAD. Way better opportunities. What else going on here? Euro dollar looks good. Euro pound looks good. Stay away from Euro Swissy. Euro pound is only a 0.5. Euro dollar is only a 0.5. I like the technicals though, which means this 0.15 will go up. This 0.4 will go up. So I would start with these three first, and then maybe follow on with these two. Done. That's it. Go to your charts. Get her done. It's lovely stuff, isn't it? Remember how you'd spend hours maybe trying to figure out what to do? Or all you did was stare at euro dollar and you're missing this one? You're like, Wayne, I never trade Euro Kiwi. Really? Well, look at all the money left on the table. You barely have an edge on euro dollar up. Dollar could just get ripper strong. See, the issue is dollar is strong and euro strong. But Kiwi is a dog with fleas. Like, dude, you're not on this? Then what is it that you're doing? I trade what I like. Well, you should be trading what you should be trading. So, in a matter of seconds, and by the way, I'm going to move the indices over here so that you look at the indices. What should I be trading and on what time frame? And it says, well, if you're a day trader, Euro and Kiwi is the best. Really? Cool. So you go to the day trading tab. There it is. There's your chart. Cool. Okay. Ride the 5, baby. Ride the 5. Okay. Just like that. I'm going to get your trading decision down to 30 seconds or less. You will always trade the right thing at the right time. Bless you, Wayne. Bless you. Thank you. Thank you very much. Yeah. Oh, yeah, we need the spike radar. Did he do it yet? Still hasn't done it, you son of a... Hang on. AI can be so freaking stupid. I have to talk to him like a child now. Yep. Notice we color code them now, which is kind of cool, even though it's the wrong data. It's kind of cool because, meet or beat, right? Meet, beat, miss. Right on H2O, producer. I am so happy. What we are building is getting so good. I am so happy because it's providing us with so much value. This isn't my first rodeo. My first version of, remember QuantBox? My first version of QuantBox was 2007. We had a Windows program. You would download it, install it on your Windows machine. And one of the things you'd have to do every weekend is download the new data set. And it would show you initial jobless claims history, and it would do the spike analysis, which we do now here. And it would tell you meet, beat, or miss, and how much in pips the market moved an hour after. And you're like, this is the spike radar that we have here. I had built one in 2007, 2006. So I am amazed what we're doing now and how powerful it is.
Spike alert, 90 seconds until United States initial jobless claims is released.
Sorry, that's because I have it running over here too. I'll switch the page. Well, to answer Matthias's question, when somebody says I'm going to spend $100 billion building data centers, that $100 billion goes into the economy, creates work. I mean, the workers that build the place, the landowners, so someone's got to put plumbing in it. But then when it's all done, then you got to paint the walls, you got to buy some servers, you got to put in generators, you got to put in fire extinguisher, which doesn't actually use water, but there's a million companies that benefit from that $100 billion. Also, we have a K-shaped economy. So for those that are in the lower third percentile, the cost of gasoline and other types of inflation eats into your disposable income by a lot. Okay? When you're putting $80 of gas into your $300,000 car, it doesn't matter that much. So the K shape is saying people are impacted differently. There's different financial demographics. Dang, this gets. I'm going to yell at Aiden again. This process is too slow. And part of this is I'm on the wrong page too.
United States initial jobless claims, actual 215K missed forecast.
215. Okay. But why doesn't he post it here? Oh, look, I see it. There it is. Okay, that was too slow. That took what, a minute?
United States initial jobless claims, actual 214K missed forecast.
So is it 214 or 215? What the heck? On my server, I see 215. Over here, I see 214. Lovely. Funny. There's a cash problem. We'll get to it. Every day we go through the little wrinkles.
United States initial jobless claims, actual 213K met forecast.
Met forecast now. What is going on? So right now he's very, very, very actively working on what we're staring at right now. So it just reported meet, beat, and miss. So what did you get? 225? Really? Cool. 23 hours and 57 minutes to NFP. That was actually me. That sounded like Aiden.
Indian rupee stays calm as investors await RBI's policy decision.
Okay.
CEE, FX, divergent policy path across central banks. Societe Generale.
UTI price forecast. Trades flat slightly above $93 barrels amid US-Iran deadlock. Oil. Inventory draws heighten upside risk. ING.
Yeah, so yesterday we had oil inventories, right? Wednesdays at 10:30. we have the EIA, and falling inventories typically push up prices. Okay. Now, what if it's falling inventories because refineries are buying? Well, we're getting pretty close to the end of that buying season. This is part of our anticipation, right? Did you know, if you look at 50 years of oil data, which I have, peak oil demand has occurred right now. Like, this is the period. Remember the window? We are in the window in which oil refineries stop buying WTI. Now, maybe they are short of product right now because of the lack of supply, but I don't believe that's true. So they have bought up all the oil in inventory. We have low inventories. That is totally normal for this time of year. Now, if you don't know anything about the oil industry, you shouldn't be trading oil. You should take the oil trading course at Investor Bootcamp. It's incredible. It's incredible. I'm telling you, it's incredible. There's no other way to describe it. It's extraordinarily good and extraordinarily detailed. And so it would be normal for inventories to be low right now. And then over the next several months, guess what? Inventories will start going up. However, demand for gasoline is about to spike. How do I know that? Well, I know it's normal. Okay. And knowing reality is a big part of trading and investing. You have to know why you're doing it. Why is it moving? Why? And so, to be able to anticipate an increase in the price of oil, and then an increase in the price of gasoline, and then the decrease in the price of oil, and then a decrease in the price of gasoline. If that's all you knew, there's cycles and subcycles and super cycles. Did you know people make a living just trading energy? That could be enough. That could be what you do. All you trade is WTI, Brent, and nat gas. So you should become a specialist. Now, what I have always recommended is you start with something. Now, I say the US dollar. So you start with the reserve currency. Forget about euro dollar. You're just trading dollar. And then after you master that, then maybe you add in something else. Maybe you like gold. Okay, master gold. And in year 3, add in some WTI. I love scalping WTI. Oh my goodness. Okay. And let's say after 5 years, you're the master of 5 domains. Dollar, gold, energy, Bitcoin, or crypto, right? And actually, you wouldn't need much else than that. Maybe what else do you add to that, Dan? I mean, that's your whole career. Imagine if you spent 1 solid year doing nothing but technical and fundamental and seasonal analysis of just the dollar. And then you did the same thing with gold. And then you spent a year just doing oil. And then you spent a year just doing crypto, right? And inside of crypto, it's not everything. You just trade the majors of the crypto, right? And so after 5 years, if you're really truly doing and conducting research, technically and fundamentally, and you understand the cycles of all of these assets, You'll always have something to trade. And the other thing is you'll be very, very good. And third, that's enough to have an entire career. That's actually more than enough. Maybe 4 years. Just pretend you're going to go to Harvard for 4 years. Year 1, you learn about dollar. Year 2, you learn about gold. Year 3, you learn about oil. Okay? Whatever. It's a 4-year degree in printing money for a living. Hey, Wayne, what do you do for a living? I print money. What's the name of your company? ATM Capital. Aiden is still working on the spike radar. Amazing. He's just going ape crazy trying to figure it out. All right. He says he's done it. Let's double check. So I'm publishing here. The whole state of the U.S. where debt is getting out of control, bond prices are high. No, bond prices are low. Are we into a death spiral? Well, we're a reserve currency, so the debt is in dollars. There's a death spiral if you're like Turkey, for example, and you have massive levels of dollars and euros. And the cost of servicing that debt is exponentially skyrocketing because the Turkish currency is practically worthless. So it gets worth less and less and less. Yeah. When you're the reserve currency always comes with massive levels of debt. So are we in a death spiral? Well, Europe didn't invent artificial intelligence. Europe didn't invent the internet. Europe didn't invent the electric car. They're like, wait, they had electric cars 150 years ago. Yeah, shush. Okay. So I would say America's far from dead. You know, Yeah. So if Ebola gets out of control, who's gonna create the cure? So yeah, far from dead. Too much debt for sure, but it's normal for a reserve currency. It will. It becomes a problem. Um, it can become a problem, but are we in a death spiral? That would not be my thesis for making money. That sounds terrifying. So instead of the hyperbole here, um, do deeper research than a one data point trend, right? Uh, debt's too high. Sure. So the economy is going to collapse. Is it? Yeah, maybe. Mass media. Yeah. But remember, um, I don't follow any of that. I'm very, very isolated from that. I don't find it helpful. So I don't know anyone else's opinion but mine. And I like it that way. So, are we in a death spiral? No. Is debt too high? Yes. Is it going to be a problem? Sure. Always has been. Um, is it going to be a problem this year? No. In 100 years? Yes. Is there alternative to the reserve currency? No, not really. So, right? I don't think it'll be another fiat currency. If there is an alternative, it'll be a digital currency. But Bitcoin just lost 50% of its value. Not quite a store of value, huh? So I don't have any hyperbole like that. What I share with you guys is that we went through weeks and weeks and weeks and weeks of the United States flying over Iran, dropping bombs on them. Like a hot war. Okay? Thousands of targets being hit. Stock market didn't do anything. Then we get into a window of time in which the stock market normally declines. I showed this to you, that we have weeks of decline and that the recovery is in the April, May, June period. But March is definitely a down period. We had that. And so despite weeks of the market moving sideways, then what normally happens is the stock market declines a bit, and it did. It dropped 10%. Right on cue. And then right on cue, it reversed and went up again like it's supposed to. Meanwhile, the media is freaking out, and everything is about the war in Iran, and everything is bad, and everything is good, then it's bad again. And yet, if you were trading and had no access to the outside world, you had no idea there was a war going on in Iran. The biggest thing is how quiet it's been in the last 3 or 4 weeks. And all you saw was a warm open to the year, then treading water till March, then a 10% decline right when you thought. So that wouldn't have surprised you either. And then you would have started deploying capital and buying, because you always tend to buy around that period, and you did. Then it went up for 9 weeks. Nice, but that wouldn't have been unusual. And now we're kind of stalling out as we move toward Canada today. You wouldn't have even noticed the war in Iran. I want you to fully appreciate that. So I don't know what other people think and what other people are doing. I have data, I have experience, and everything looks right as rain. And, should we be worried about a death spiral? A death spiral? The markets are boring. And if you had told me, oh my God, Wayne, there's a war going on with Iran and Hezbollah and the Houthi mamas, and 20% of the world's energy is offline. I'm like, really? Holy smokes. I had no idea. I guess that's why oil went to 110. Other than that, okay? And do you remember? I remember this situation where I go to Las Vegas to speak at a conference. This was February, before the war. And I think we were $68 a barrel or something. So I do this presentation at the Vegas conference, and I have a slide that says Aiden is predicting that we're going to be at $92 a barrel by July 1st. Like 3 weeks later, we were at $92 a barrel. Now, we went up to 110, but then it kind of like bounced up and down, bounced up and down and up and down. And here we are. We're rolling into July and we're at $92 a barrel. So even, I think the only surprising thing, again, if you were on a deserted island and it's just you and your machine and all you have is access to traders and you're just trading, the only thing you would have noticed with oil is the velocity in which you got to your price target. And then you'd notice it just has moved sideways since you've hit your price target. And then maybe we come to resolution and the oil price comes down, but we are already anticipating that. Not because of resolution to the Middle East, but we track the historic ebb and flow of oil prices and oil inventories. So through our bias of not knowing there's a war going on and that 20% of the energy is held up in the Strait of Hormuz, if you didn't know any of that, your confirmation bias would be, hey, this usually happens. And it's happening, so it's normal. So it begs the question then, how abnormal are the markets right now? So you have to know normal to know what's abnormal. Oh, I forgot this isn't working. I'm going to have to yell at him about this. I'll have him do it now. But all of those are facts. That did happen. When we're at 60-something dollars a barrel, I did show Aiden's prediction of going to 92 by July. Or we did it. So now if it was a peak somewhere around July and then oil prices tend to fade, I wouldn't say collapse, but fade, I would, in my mind, say this is a period of time in which oil prices go from a peak to a fade. And if it's doing it, I'm going to say, well, that's just historically normal. You might find out that we get a 6-month peace deal with Iran and oil prices drop. And you're like, oh my God, it's the peace deal. It's geopolitics. That's what you're going to think is right. And I'm just going to say, well, yeah, that's what I expected. It always comes down this time of year. And well, so what are you going to do next year? If it's 100% geopolitics, and let's say next year we don't have this problem, then how are you going to trade oil if you're just hanging on the headlines and you don't even know what's normal? I'd rather start knowing 50 years of data to know what's normal and then be able to read how much current market conditions, like geopolitics, are impacting normality. And right now, it's barely anything. It's just increased the volatility. But we were not over $100 for that long. If you're thinking about a whole year and you buy in, February, March period, and you hold till July, and then you take profit and watch it fizzle, then that is right as rain. That is totally normal. I'm getting hungry. I'm going to need to go eat some lentils and sardines. Yeah, I guess it's 9 o'clock. Went a little long today. Is that all right? But Matthias says, okay, yeah, but this is this supply basically is the biggest energy supply crisis ever. Yeah, 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 for sure. Absolutely true, Matthias. Now, if you're going to trade like that, the biggest energy supply crisis ever, you're probably going to get crushed. I'd rather be me down in the bunker, okay, buried underground in my bunker, and all I have is Tradar's MT4 and the truth. And I have no contact to the outside world. I wouldn't have even noticed. And I think a calm, collective, confident in trader is going to do better on the long run. What about the war? What war? There's a war in Iran. This is the biggest energy crisis ever. Like, really? Well, I guess that's why the velocity and the volatility increased, but interesting. Yeah, that is the improper confirmation bias. Correct. Absolutely correct. Cool. So, what was the big thing here? I want you to be so absolutely informed that you log into TradeRs and you go, holy crap, look at that! Negative 4.49? Oh my God, that is so different from the last 6 weeks. Something incredible has happened, and I need to go pay attention. Is this the top in the market? Maybe I should go to my fundamentals and click on seasonality and go check it out. And oh my God, we're in a window. Oh my God. I'd rather you do that to notice that today is different from the last 45 to 60 days. And that you just woke up to something unusual, and it may be an important sign. And if you're already waiting for something, then you know how to put weight on what just occurred. That is confirmation bias. If you're worried that tigers are in the grass because they often come to the village this time of year, it pays to know when to take the rustling of the grass seriously or when to say it's just the wind. It's just an impala bedding down for the night, not a big scary tiger. Man-eater. Whoa, whoa, there she comes. Watch out. Watch out, boy. She'll chew you up. Yeah. So, when to be on heightened alert and when to just get up and do what needs to get done. Veritas is the truth through knowledge. You know the truth because you are informed. That's why you are Illuminati. You know. You're not following the news and bloggers and YouTubers and talking heads on TV and talking heads on the radio and talking heads on webinars and oh my God. Shut the up. Now, you probably feel about me that way sometimes, if not a lot. But what I have for you is the truth and knowledge. If you want to be Illuminati, you don't listen to anybody else. You have the truth. You are the truth because you are formed and enlightened. There's a difference. Peace on earth. May the pips be with you. May our profits be above average. Like I said, I'll see you at 4 o'clock to do our swing trading meeting. And then I don't think it'll be a long one. And then I got to go to the food bank. I'm going to put in a few hours of charity work there. Right? Just trying to give back to my community. I will see you later. And thank you, Matthias. Thank you, everybody.